Good morning, everyone. How we doing? We're back. Hope you're all doing well. I was away for a while. I was on a little vacay mode here, so I didn't do the updates in. Excuse me. Jeez. In YouTube per se. So let me just move this over. So we're back at it. I hope we all had a great last week. I was away for a few days last week in terms of the YouTube updates, but was trying to keep up with these markets a little bit. It's now Monday, June 10th, right? Monday, June 10th. So we've got a decent bit of June already underway. And we're starting to see bouts of volatility start increasing and whatnot. And we're coming into a week that has a fairly heavy news calendar, right? We have a fairly heavy news calendar in the week. We've got the FOMC this week. We've got some inflation data right out of CPI this week. Out of CPI this week, and we've got a few more different news events that we want to talk about before we jump into what we're looking at on the S&P 500 futures. So, election season is upon us, not only in the U.S., because in the U.S. we're about 5 months away from the next presidential elections, but also from the Euro, right? The Eurozone. The first Wall Street Breakfast edition of 2024 was called the Year of Election. And looking at some of the news from the Wall Street Breakfast, right, things are rapidly changing across the globe as investors edge closer to the middle of the year. Some recent political shakeups have been seen in India, South Africa, Mexico, while things are starting to take a pretty big shift in Europe as well. We saw that the UK Prime Minister Sunak has called for a general election on July 4th, while results are still being digested from the European Parliament elections over the weekend. European parties are basically big tent movers, with national parties from 27 EU member states teaming up to form 7 major European political groups with representation based on the population. It's a big deal as 720 lawmakers in the European Parliament approve the Union's budget, negotiate EU laws, and approve the President of the European Commission in a vote that will take place on July 8th. After all, it is the year of election, and the remaining 27 commissioners are chosen by their respective countries under the European Council, which sets the bloc's political agenda and will be approved by yet another vote in Parliament on December 19th. The biggest gainers from the last election were the EPP, which will be the largest party in the Parliament with projected 189 seats, as well as the Identity and Democracy Group, which are known for their nationalism, Euroscepticism, and would see even bigger gains if Germany's AfD wasn't kicked out of the party several weeks ago. The biggest losers were the Greens, which champion environmental and climate protections, as well as Renew Europe, which is known for pro-European and liberal stance. Looking at things, the political spectrum, the EU as a whole shifted more center-right conservatives and even far-right, which can bring a major shift to the bloc. Immediately after the elections, French President Emmanuel Macron called for a snap parliament election, while the Belgian Prime Minister De Croo resigned following a heavy loss. There were also fairly big gains for the right in Germany and Austria. At the EU level, centrist parties like the EPP and the SD and Renew Europe will still have the majority seats in the European Parliament, so the current coalition will likely to continue, but priorities could change due to growing influences elsewhere. So energy and agriculture policies have already come under pressure amidst a cost living crisis and a weak economic growth. National defense spending, which will notably be due to migration fears and border security, while industrial policy is also focused due to the rise in competitive measures in the US and China. So it's a huge part, right? It's not necessarily the easiest thing to understand, especially coming from the US and looking at the EU elections. But there's a lot to note here, right? Especially the way that things are shifting, what the ECB and the monetary policy might look like in the future, right, in respect to some of these shifts. I'm not saying that they're intertwined one-to-one, but these political shifts also do have some impact on how they go about specific monetary values and how economic changes and shifts come about in the EU, which, as we've seen, is a fairly large economy that can that can sway and has been cutting the rates even before the U.S. So that's going to be a very interesting move forward. Now, one of the biggest events, right, obviously is going to be the U.S. presidential election that comes out um, in November, right, in 5 months. So a lot of the chatter around that is election years typically in the stock market are fairly positive for the stock market, while a lot of people are starting to look at this thinking that we're just too extremely overdone and we're most likely going to see some kind of turning point in these markets, a larger turning point where some people are even calling for a recession to start technically by the end of the year. Now, into the end of the year, into December, September, October, November, right? All those months, the last final quarter, we have the NERB, which will most likely talk about the potentials of a recession and whether we can technically call this a recession in the States. And a lot of people are looking for a very significant downturn in equity prices towards the latter half of the year. Now, we've got to be very careful with that because presidential elections, like I've said, if you look in the past data, you'll see that we generally, and we typically have some kind of upside momentum that creates strong gains for election years, where I think there's still a little more upside, but we're starting to get into a period of higher volatility right now. This week with the FOMC, with inflation data, with a few other shakers and movers, right? NVIDIA, for example, is starting to trade its first day post-split. What that means is generally stocks, they rise leading into a stock market split. And what happens is the majority of the time, I'm not saying this is be all and end all, but a lot of the time, what you're going to see is a stronger decline in the asset's price post split. Once that split hits, you typically have 1 to 2 weeks of declining price action and offloading after the split, which could put some downside pressure, significant downside pressure in the overall U.S. equity market. So I'm not saying just start shorting NVIDIA, but we're entering a period where volatility is starting to creep back up and the expectations of volatility spikes, right, which could be maybe not led, but looked at from NVIDIA's standpoint as well, because it's been holding this whole market up with a multi-trillion-dollar market cap for quite some time now. Apple also will kick off its annual Worldwide Developers Conference today. That's another thing to note, with a keynote address that it's perhaps the tech giant's most widely anticipated speech since the iPhone was introduced about nearly 17 years ago, which is a crazy statement. While the event isn't usually a catalyst for the stock, the fact that the conference is likely going to focus on Apple's generative artificial intelligence plans could prove significant for investors, and there could be some movement in this market. An AI-based Siri upgrade, Apple's OpenAI partnership, and new features that will allow users to run generative AI commands on the iPhone itself are anticipated to take spotlight, and notably, Apple is not expected to unveil any new hardware at the event. Apple is very close to all-time highs, actually, after we saw a very, very poor start this week in Apple that drudged down the majority of the first half of the year before getting into this strong rally mode from about 165. Prices on Apple right now are up about 20% from that low in a matter of about a few months here, 2 months, and we're starting to see that upside pressure. So Apple, again, the fact that it's coming back in charge with big tech is helping sustain these markets fairly well. Now, in terms of some of the other news, we're starting off the week on a more cautionary note, if you will. We wanna take it step by step because we have Wednesday pre-market, the CPI data that comes out. Wednesday is a jam-packed day. We've got the FOMC, right? We've got FOMC economic projections, FOMC statement, press conference, federal funds rate naturally. We've got the core PPI and the PPI on Thursday pre-market out of the U.S. It's just a plethora. This week is very jam-packed, centered in the middle of the week to have a lot of movement, volatility, and medium-term expectations for price movement. So we could be starting off on a slower note, realistically, before we get things moving along. So we got to be very, very patient and cautious about how that shapes up. If we take a look at the S&P 500 right now, obviously the past few days we've seen some upside momentum here, especially into the end of last week. Prices were trying to get a push higher. We had the NFP data that came out pre-market on Friday, which initially pulled prices lower, but only to allow for a bid to kind of sweep everything back up. And right now, it's kind of a wishy-washy pivot between 53.48 and 53.50. So if we can actually see real sellers come in under that area and really push this, we're accepting into distributions lower where I'd be looking for 53.24 realistically. Now that's going to be the changing point to start the week. Anything back above it, I don't mind looking for some of that long side press, but realistically, you got to be very cautious going forward with this. Because we've been rotating at these highs, creating a decent amount of volume without too much continuation over the last few days. So it could be that time where we get a little pullback before all that news starts flowing in midpoint of the week, and we try to dissect that. So with that being said, happy Monday. Hope you all have a great start to the week. Take things slow, take things step by step, and let's get back at it and have a great week ahead. So it feels good to be back at the desk. And we'll be doing this for the remainder of the week. So thank you all. We'll chat soon. And check out community.tradeproacademy.com where we post a lot of information regarding these markets. So I'll see you there. Slower start to the week. I'm going to be adding some of the stuff. I just got off a flight. So we'll ease into the week.